The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technician on this 15th day of June. And we're looking at a very interesting session. Of course, we also had some really good programming here. 3 hours, you got John Logan, you had Larry Pesavento, Tom O'Brien. I hope to give you the 4th hour here. A lot of information. Most importantly, what we're looking at is that the Dow through this Greek, you see, now we've got the umbrella, we've got the dark cloud cover, which is really important. If you're going to have a sell signal that goes to a sell mode, weekly chart is in the sell signal. Excuse me. To go to a sell mode, you'll need a lot more. You need the Dow to crack 17,500 support to really see the weekly trigger some kind of a sell signal in the monthly, and that's going to take a lot. That would imply that the sell mode in the daily chart of the Dow, and the sell mode, not yet, the sell signal that could be accelerated to a sell mode by this Friday. In the weekly chart, I have to wait for the full candle, even if intra-week, it seems like it's going to happen. And then the monthly chart, you start to see things kick in. So let's do this. I've got you just to show you exactly what I use Chapman wave methodology. You identify the lowest low bar, and you merely count each successively higher peak after that. So the S&P mini futures, E-mini trading at -9 now. It was down -18 before. Is at this particular point with the low of 2071, it's gone to a peak A. That's that first peak right there. The moment it crosses 25 cents, because it moves in 25-cent increments, it starts leg B, and that started right there and went to 2078.50, which is just above the 2078 level, 25 cents. But it is a peak B. Pulls back, that makes a peak C, and pulls back, and then it has a sudden spiral to the upside, going to the high that we've seen in this 5-minute bar, is a 5-minute candle. See the MACD cross positive. The stochastic went from under the 20% to over the 20% area. It went from a buy signal to a buy mode with good action in the price, but not good enough. The MACD then crossed positive. You had 3 of your 4 indexes. Let's call it 3 out of the 4 trigger points already initiated, and that says that all you need now is a price move that takes it nicely above the peak A in this particular instance, and that would suggest that you're going from a buy signal to a buy mode in all the different aspects, stochastic, MACD, and price. And lo and behold, we've got that, and the target here is 2008 to 2085. So 84 to 85. And that's the 200-period exponential moving average. Now, let's just get rid of this because I just wanted to show the demonstration is from a lowest, most identifiable low bar, you merely want to count each successively higher peak. Lo and behold, in the 120-minute chart, on the way down, you had a peak C minus failure back on the 11th, pulls all the way back down. We didn't get the test of the left side, right side price time move, which was very close. 2068.75 was the low on the 9th of June, and that was at 8 a.m. Now what's important is that you've gone in an arch formation, you've pierced the Chapman wave inside wedge support, and then became resistance, and now is back to being a support level, and that will be very important on the day that 2079 is not taken out, and now you've got that bounce that we were expecting. Why were we expecting a bounce in the Chapman wave methodology? Because the Chapman wave trend gauge, the short-term trading index that was developed and is part of Richard ARM's index, I have nothing to do with the makeup or anything of it. I have only to do with the price. And the price said, let me show you something here, that on Friday, let me move this away. This is why I show my subscribers to my opening call every day, that this is the Dow chart with the Chapman wave methodology. So here's one of the quintiles that I use, like a This is on a particular page. I call it my overview and market today section. And that suggested that the VIX, which was in a downside wedge formation, should break to the upside. It's done that. It said that the arch formation forming in the 120-minute chart could be a peak C minus. It's done that. And then on Friday, it showed that the trend gauge went to 2.16. And then it went to 2.68 this morning, but the 2.16 suggested a very high reading. And because of it, as I said, that within 1 to 2 sessions, the S&P E-mini futures should have a 7 to 9 point gain at least. And that should impact at some point in the day the cash indexes, and it should give a very nice rally, probably from the low. That might be the low of the day, but a rally that says, I'm going to rally, not commensurate maybe to the 7 points that we saw. It could be, doesn't have to be, but it just says, I'm going to rally. And only later will I give back some of that rally. And that's exactly where we are right now. In the S&P, the low on the 9th was 2085.62. And the low today in the S&P is 2072.49. So it's gone to a leg D to the downside in the S&P cash daily chart. It's gone to a leg E to the downside in the Dow daily chart, which all suggests that from here, we could have a bit of a bounce, not a relief rally per se. I'm treating it more as a bounce. Now, the Dow's only down 95. It was down almost double that earlier on. And the S&P is only down 785 in the cash. The composite index is down 26 at 5024. Gold is up about $1.70 at 1180, trying to rally here. Silver's up 18 cents at 16.09. I look at some of these just now because I had a lot of questions over the weekend. I'll try to get to them now. Crude oil is down 46 cents. High-grade copper is back at the 2.60s, 2.64 actually. Not so good. Bonds are up 9.30 seconds at 150 and 24.30 seconds. And what is going to be very interesting here is that the dollar is up 14 cents at 95.13. It was up more than that before. So now what I'd like to do is I'd like to do two things immediately. I'd like to show you that the VIX index is alive and well. I think saying, is the VIX actually useless now? It's not doing anything. No. I think the VIX is very important, and it has a specific purpose. And that purpose for me is to see all the way through to this Friday, because there's a lot of news, and I say we've got the dark cloud cover of a dark cloud cover of the Greek. Who knows if it's going to be backing out of payments or anything like that, a default. Ooh, I don't know. But what we're looking at here is the VIX index is acting much better over the last couple of days because it's demonstrating that it is a viable instrument. It is a horrible, horrible trading vehicle unless you're right. And if you're right, it's a beautiful trading vehicle. And, you know, it takes a little while to get used to it. It gets a little while to have very tiny stops in so that you don't get stopped out and have a horrible loss. And then if you're on the correct side of it, it makes a big gain very quickly. After all, the gain this morning right now is 8.5%. Earlier this morning, you had gone all the way to, from the close on Friday of 1378, you hit 1557. That's 2 points. It's a big percentage, right? 15%, something like that, big percentage. So at this particular point, we're going to see whether or not by the end of the day, certainly you'll know by 3:15, 3:10 actually, you'll know that if the market is starting to pull back again, it's back to being very nervous. And if for any chance the Dow is now only minus 25 to minus 30, S&P is only down minus 2 to minus 3, maybe even unchanged, that's going to suggest that there's going to be a lot of whippy action this week and that you can now see how voluble the upside can be in the rebound, but you can also see now how quickly we can slide to the downside. All right, so I wanted to show you the VIX index and just suggest that we keep an eye on this. The weekly chart, just with the move today, is suggesting that the cup formation is alive and well. The 120-minute chart says, hey, I've been here before. I'm not going to make any statements other than to say the close below is at 1495, a close below 1440 kind of puts it back into the failure pattern. And a close anywhere from here, I don't know if it'll have the same intensity of nervousness, but anywhere from here up to 1520 or higher even would be saying, hey, be careful. I'm now producing the kind of result that you were looking for before, and being activated like this makes me a viable instrument. All right, that's all. We'll go through the weekly charts as the weekly moves along. Now, there are a couple of things I want to look at here. Let me go in order. I had a question about the SLV. That is the silver iShares, I believe. Yep, the iShares Silver Trust, trading at 1536. One of the things, actually, the question was on the USLV, which is the double instrument on the long side. I think that the H pattern that goes to a lowercase m, the one that I ought to talk about constantly, is the pattern du jour. You've got to be thinking failure pattern, until you can reverse the process, start to make new highs in the 1750s, and then immediately break to a really good recovery high for the last 6 months of going above 1770, closing above 1770. So let me put it this way. When we are looking at this lowercase h that broke down, the one from 2014 that went all the way to the March high, was it March? Yeah, March, the week of the 28th, then pulls back, breaks the left side low bar, has another bounce lower than the previous one, only goes to 2064, and then breaks the left side low bar of 1791, and then makes a one-to-one to the, or more than a one-to-one to the downside, to the 1464 level, rallies and then fails again, making another arch formation, or lowercase h. And the lowercase h then becomes, let me just check, yep, a lowercase m. And that just makes it real simple. 1566 is the weekly, 1545 is the 9-period moving average resistance on the daily. 1566 is the 9-period exponential moving average on the weekly. 1608 is the 9-period moving average in the monthly. So what are we looking at? We're looking at so much resistance to the upside, it's going to have to be some kind of a spark, or something that says, whoa, banks are in trouble, everything's in trouble, Europe is looking terrible. I have to be buying gold as a cover, as a way of an insurance policy. I call it where it becomes an instrument, a financial instrument, an instrument of fear. So that's gold. Silver will follow suit. But in the meantime, silver's acting very poorly. It's holding okay, and on the day it's actually up a little bit. But the way I'm looking at it is that I believe that this pattern is really powerful, and that I have to wait for evidence to say that it has strength enough to break into the 1580, 1610 area, and that has to be within a week. Today's Monday. By next Monday, Tuesday, it just needs to be there and holding as the dollar has come back to retest recent lows. Not the case at this particular point. So the question was, what do I think, where would the stops be? So if I go to the USLV, just to use the instrument that...
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Sorry, I must apologize for that. While I was waving my hands, I guess I pulled the cord out that had my sound, so for the earphones. And I'm experimenting at trying to get as professional a setup as possible. And there you go and blow it on a silly thing like that. Anyway, we're back again, and we're looking at just a couple of questions. I was asked about Facebook. I don't think Facebook is a buy here. I think Facebook, in fact, needs to do more digesting. The monthly chart is kind of not rolling over, but it's definitely producing an arch formation like that. And as such, it says to me, unless that Facebook can get to the 89 area and hold there, this pattern is the one to be careful of, because it's suggesting that the doji candle of last month, if there's a close below 76.79, that portends lower prices towards the 73s. And if there's a higher close this week above 81.85, then I have to say that there's a leg D possibly coming over the next 2 months, rather than a pullback before the next big move in Facebook. So that's Facebook trading right now down $1.21 at 80.32. Next question was, I just wanted to finish with that SLV because I don't know where I had a cutoff. The SLV, if you got in the low 17s, congratulations. All I would do on that position is I would let the market tell me, because everything about it suggested we should be retesting the left side low of the 24th of April at 16.79. And I would put you see, I could tell you, put a stop in, and then lo and behold, it makes that H pattern, which I discussed before, that says I've taken out the left side low, but if the bar that takes it out, or the very next bar, has a reversal and closes above that left side low bar, in this case, in the USLV, the VS 3 times silver, ETN, I believe it is, if it closes back above 1679, you could have a very nice bounce towards the 1790s. So it'd be a pity. I'd say put in a stop, and then all of a sudden you go right back in at the same price. I actually don't mind doing that, and I'll tell you why. Because if the dollar does start to accelerate from here, and I'll talk about the dollar in a moment, if it does that, then gold and silver will be vulnerable for a little bit longer, and that H pattern that we've seen in the SLV and the pattern that we've seen in the GLD, this arch pattern which just keeps continuing to unfold, would suggest that a test of the lows is possible. And then you've got to be very careful, because look at the same pattern in crude oil produced a really sharp, look at this in the monthly chart. Look what happened when it broke down. Crude oil right now is holding quite nicely, but it's doing the inverse. It's making a cup formation, double cup formation. But look what happened when the H pattern broke down. It went almost 1-to-1. Well, not really. It's got the pattern that says it could, within another couple of months, if it takes out the low of 46.38 or the continuous, if it closes under 46, you're looking at 42 to 39 very quickly. So it's just a pattern that we see that can gets repeated over and over. So, and here you've got the same pattern successful. This is a lowercase h. They went to a larger H pattern or arch pattern. And the stochastics at 77% when the MACD is still expanding. So that says that crude oil, as I mentioned last week, is holding, and I suspect that it will try to make a leg D. Then we've got to start being careful about what happens to crude oil. So now let me do this. Within the context of what we're looking at in terms of patterns, so the SLV, use the SLV as your benchmark. So I'm going to suggest that the SLV acting quite nicely here has a 120-minute chart that is bouncing. I would probably put at least a stop on some of my position. It's at 1541, at 1520. Even though it could maybe just go to 1508 or 1495 and then bounce back right to where we are, I'd rather take that risk of not being in a trade that's fading because of this uppercase A pattern straight up and straight down, the Eiffel Tower, which always suggests be careful because a retest of the low is likely. So it's acting well now. So treat that as a bonus. And then what I would do is on my position that I have now, I would just put a trading stop. It's at 1544. I'd put a 25-cent trading stop on a small, on part of my position and say, hey, you just keep going up like this. I'm happy as a clam, because when I get taken out, it allows me time to make a decision about the rest of the position. Okay? And the market will just tell you what to do. So that was the SLV. UNG, I haven't looked at that. I've looked at it, but I haven't looked at it with you for a while. UNG is bouncing off the A pattern. You see, this is a successful pattern because it came down on the right side. Let me make this a bit bigger so you can see what I'm talking about. See, that left side took time to go. It was straight up, but it took a little bit more time than coming down. But if I put, now I can hear the break. If I could put a left side, right side price time match here, it touched it in a shorter period of time, and then it rallied sharply. So I'll talk about the two patterns when we get back. But in the meantime, if you're all on UNG, good. I'd have a stop on some of my position at 1310. It's trading at 1389. I'll be right.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back. So what we're looking at here is the UNG, and the way I'm looking at it is that it's kind of in a trading range now. It's trading at 13.89 or 51 cents. This is the United States Natural Gas Fund. So the way I'm looking at it is that it's made an A pattern. So far, it's a successful A, but now it's making a smaller one. If you're long, that's great, because if it goes above 14, it's 12. Really, if it goes above 14, 15, it suggests quite strongly that it's making a second soft W formation. It's going to try its best. It's really a third. Yeah, it's really a third. Let's do that. Oh, there you are. Okay, and that says that the weight of evidence is suggesting that it's trying to move towards the upside. So that's what you want, because if it gets to 14, 15, then there's a good chance that it's going to try to tackle the very important candle of 1445 to 1491 on the 21st of May. But my only concern here is that the stochastic's only at 63%, and the MACD is really struggling. It really needs to move much nicely, and the histogram has to improve. So a slide underneath the low of Friday of 1330 says I would just get out. I would not be playing that at all. So it has to rally here and has to do it fairly soon. So let's go to our first caller. We've got Ken in Derby. Oh, where is that? Hi, Ken.
Hi, Basil. How are you doing this morning?
I'm good. Where are you?
I'm in Derby, Kansas. It's just outside of Wichita.
Oh, okay. You're in the real Midwest, right?
That's right, yes.
That, I think, is the exact midpoint. All right, very good. You would like to look at?
UWTI. It's 3 times long oil.
So, okay. Now, do you have a position at all?
Yes, I'm in it at 322 right now.
All right, because this is the best way to be looking at it if you are already in it, and I'll tell you why. It's had a really strong move in a stair-step move from the low bar. This is UWTI trading at $3.41, down 6 cents, and it went all the way from the 18th of March. It just spiraled. I love the candle. This overbearing, engulfing candle is just a fantastic sign for an upside move if certain conditions are met, and it was. And it went from that low bar at 179, it went spike up to a peak A, pulls back sharply, spike up to a peak B, pulls back way sharper, then it goes to a C, pulls back again to the 9-period moving average, then it spikes up to a D, pulls back to the 9-period moving average, goes to the E, pulls back, and the E, the peak E is at 428. That's a huge move in the crude oil. And then what does it do? It goes sideways. Now, because it looks a little bit like the UNG chart, I'm going to spend a moment on this just to say that if you're long in the 320s, I probably would say to you, because crude oil is becoming rather volatile in the shorter term, but still within a kind of a trading band, nothing like the big move it had on the way down. This is really like a bounce off a low. Now, I often talk about a bounce in many ways. I talk about a bounce if you have, say, a tennis ball and a concrete floor, and you drop the tennis ball, it'll bounce. If you throw the ball down, it'll bounce, and it'll bounce higher than your hand was when you let go of the ball. If you have a ball that's like a balloon with water in it, it's hardly going to bounce. It's going to go plop. In this particular case, from the recent decline, it bounced very nicely, but the recent high and the February high of the 3rd at 432 was not taken out on this bounce at 428. So this is the tennis ball and concrete where you let go of the ball, you let it go, and it just bounces quite strongly, but it doesn't bounce higher than the hand. And that says to me that on a purely scientific look at this, besides the fact that it made a little bit of a left side, right side price time match, you want to see crude oil. If you don't mind, I'm going to go to the crude oil contract because this is what it would be based. Is it based on the crude oil contract? Because it looks close but not exact, but it's kind of on the crude oil contract?
All right.
Okay. So if that's the case, you see crude oil is struggling. If today, instead of being down, didn't go at all below the 9-period moving average. Instead, it tackled the high of the 10th, and it went above 61.82. I say, wow, this is going to go to a double top, test the 63.54. So all I can say to you is this. So, Ken, what I would like you to do is, in your position, if you have, you see, in this particular instance, I want you to look at the weekly chart. And the weekly chart has suggested that it's held the 9-period moving average. It doesn't have much strength because it's taken 1, 2, 3, 4, 5, 6 weeks to make a peak C and then fail to get to a D. When it takes time, I like speed. I like the way it went before. Peak A, 1 week down. Peak B, 1 week down. Peak C, and now it's got this longer period of consolidation, but it is holding the price. So I don't want to get you out of the price. I just wanted to say, how would I handle it? And I would handle it by saying, crude oil can do anything overnight, and we know that. And it's had some nice moves. It's kind of reversed. Every couple of days, it's reversed direction. So at this particular point, at 340, it's acting okay, but you really want to see it by tomorrow get to about 351. If it gets to 351, I'm going to recommend that on part of your position, you have a trading stop. And that trading stop could be even the low of today. You want to give it, crude oil needs a little room sometimes for its wiggling. So the low today is 330. I don't know if that's too much for you, but I'd give it a little bit of room. And I would say that if it's able to push higher by, you need 3 days. Today's Monday. You need Wednesday afternoon. If it's tackling, or preferably for you, above 375, that's really nice action because it's quiet. It's within a trading range. You can't really use the weekly chart because the weekly chart's been hammered so badly. But if it goes to $4 or higher by Friday and holds without cracking 320 the whole of this week, That's going to be exactly what you want. Why? Because all of a sudden, the weekly chart of crude oil itself will start to improve and say, okay, now I'm ready to make a leg D, and that'll be above 63.54 on the continuous contract. So my only concern for you is in the UWTI. If it starts to break, let me get the 120-minute chart. See, 333 is the 9-period moving, it's the 200-period moving average support. It's been above it, been below it, went below it just the first candle. Now it's above it. I still would say to you that if it starts to get to the 320s, I'd really tighten up my stop. I don't think I'd like to give this room. I'd rather get back on it, even if it's at a slightly higher price. I don't want to. It's making lower lows and lower highs since the 6th of May. I want that to change by making higher highs and higher lows, and it will do that if it goes above 379, making it as simple as possible. So does that give you parameters to look at?
Yeah, that's good. So you think maybe the trading range would be between 305 and maybe 395, something like that?
If as soon as it goes, it needs a good candle to close today. It doesn't have to be positive, but it needs a candle that's like where it is right now or better. And if it does that, and then tomorrow it gaps up and it goes above 351, 353, that's good action. That's what you want to see. As I say, you want to see it making higher highs and higher lows, and there's a cup formation forming that says it should, if it can just get a little more upside, it should start to make by, I'll tell you exactly when, it should make it by Friday or Monday. The UWTI should in fact be looking at 386 or higher if you want to see a test, a double top test of that high that was made on the 6th of May.
Okay. All right. That helps considerably. You have a good week.
Okay, thank you so much for calling. Always appreciate it. Ken in Derby, Kansas. So we're looking now, folks, at the next thing that I want to look at. So this was UNG. I did that. I wanted to look at. Oh, I was going to do something with RAD, right? Aid, we're actually out of it now, made a little bit of money, but didn't want to hang around if it was going to fail. Yang was the question I had. I don't really trade or look at Yang very much. Direction, daily, FTSE, China bear 3 times. So the question was, Basil, would you look at the FXI? Now, I can't remember if I think he's long Yang, which is the trading vehicle that you want to use if you are going to be short. The FXI, let me double check that I'm talking about the right thing. Yes. So the FXI, see, this is exactly what we're talking about crude oil. You want to see that a pattern has changed and that if it's not going to fulfill in a cup formation here, this is the iShares China Large Cap ETF, it's going to make lower lows and lower highs. And that's exactly what this is doing with the MACD negative and the stochastic at 16%. So I can't remember who asked me the question. Question. Oh, I can't find it right now off the top of my head. I don't remember. Oh, yeah. So the question was, I think you were long the Yang. That means you were basically short the FXI. Correct, because you're starting to see a peak D confirmed in the weekly chart. Monthly chart went to a fantastic peak E. It actually matched the dollar quite a bit, and it made its top 3 months ago, and now it's just consolidating from that Chapman Wave inside track resistance area. The weekly charts, it's the first couple of hours. So I just want to say, these are the parameters I'd look for. The inside, the long wick of the candle is at 47.85 from last week. We're below that right now. But I suspect that if there is a rally, your real test will come in the FXI at 48.20s. That's going to be the test. If it gets there and it holds, says, whoops, be careful, a bit more of a bounce could happen. At this point, you're in the right position with the Yang because the Yin is going down, the FXI. So now that I've done that, all right, that was the next thing. Okay, and then a dollar question. And the dollar question is actually the parameters are very simple on the dollar. The dollar is trying to make a second U formation, lowercase u formation. And earlier this morning, above the 9 EMA, it was looking good, and now it's not looking that good. The gold GLD is now at 114.06, and we saw silver was having a nice rally. And the GLD is having a good rally. And what I'm going to suggest to you in terms of the dollar, just a question, I think, I don't believe it was a question that the person had. It was more a question of how about the dollar in relation to other things? Look, the dollar went to the 200-period exponential moving average exactly in the 120-minute chart at peak C and then failed. Now it's making a second arch formation. My thinking here is that the dollar has had a couple of chances to really move higher. It took one chance early last week. There was that big spike that was on the 5th. It had the big spike, and then it failed and produced this downtrend resistance line, which is now much higher than where it is at this moment, because even the 9-period moving average of 95.31 is resistance. So I'd like to grab the gold contract right now and say, look, the gold contract has this rectangle formation, which went just a little bit under. Right there, and that's the low. That was the low there. And it went a little under and then closed above it. Closed below it and then closed above it. I would suggest, if we're looking at the, I just want you to draw this to show you that there could be a pattern here that we've seen many times before. It is the action and reaction of two fighting patterns. One is the lowercase h that is forming, and the other is if there is a successful test, even if it takes out the low of 1.162.12 on the gold, I'm talking about the gold contract, sorry, on the gold contract, you could see, and now I just have to do this because you need space on the right, so I'm going to give it maybe 14 bars right there. You want to see that gold, if it pulls back again, doesn't break, I would say, the body of the candle, that closing price of 1.168, and it's at 188 right now, 1188 right now. So at this particular point, if there is another high made in the short term above the candle of the 10th, that was late last week, at 1191.80, you go just a little bit above that, all of a sudden you've got leg B, and I will immediately say, hey, I'm tightening up this particular pattern. I'm using the left side plumb line right there at the low that was made on the 5th. I'm going to draw this as a pattern that says, to the left side high bar of importance, draw in a left side, right side price time match. I don't want to get too high about this, so that's the candle I should use. It'll make it real tight at first. So we've already gone by. That means, okay, go to the next left side, and I'm going to go to the barrier over here. Look at this. It's a very simple technique. And then it says, now draw the parallel and see where you get. And that gives you a sense of the timing of a rally. And it says you could do this. It's fine. It's a little tight, but that's the way these things work. And do you have a right side? Yes, you have a right side. And it's a right side join. Absolutely. It goes from the left side bar to that high bar. And right there, we've got it perfectly. It says in the gold contract, if on the 17th, today's the 15th, 16th, 17th, that's on Wednesday, the gold contract had broken above 1191.80, doesn't even have to close, just has to break above it. Then your inside wedge, and I'll expand this in a moment. We'll have a break and then I'll expand it and I'll show you exactly what we're looking at, how this particular technique works. And it'll say that you should hit right there. You should hit 1198. I'll be right back by the 17th. I'll be right back. Dow's down 102.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks, we're back. Dow's down 102, S&P's down 8. Now, there are some things that I'm kind of impressed with. Even though for my opening call, especially now that we've been taking out some of our long positions, this is very interesting action because mostly now we're short. And, excuse me, wanting to add to the short side. But we've already had a successful Chapman wave trend gauge bounce and a pullback, so we're almost like fresh. This is whatever happens from now, it's like the start of the day coming up. In the next, 5 minutes to 12, don't forget you've got, I got Daryl coming up right now. So Daryl, you got Dave, you got, Daryl, then you've got, of course, this new schedule, I got used to it. Then you've got Steve Rhodes, you've got Dave White, you've got Tom O'Brien. Just a huge package you've got here today. So let's go on. We were looking at Bank of America. I had a question about that. It's making a U-shaped pattern. It's in leg D in the weekly chart. That was the question. Monthly chart is going to be really interesting. Does it make a little kind of a head and shoulders top, or does it break out? In Bank of America is trading at 1748, down just a penny. And the XLF It's come back very nicely after taking us out. I don't know why I put the stop so tight, but I did. But we made a tiny little money, and now it's bouncing up. And XLF, S&P Select Financial Spider Fund, is at $24.99, down 5 cents. But I've got to watch this one really closely. We'll see what's going to happen. So let me just once again go back to the VIX index. Look, the VIX index is now pulling back, but it's off its lows. So this is going to be a very important session for two reasons. One is if it gives back a chunk and goes back to the 1464 200 period moving average, it says, hey, don't get excited. This is this. And I told my subscribers, we've got to treat this as if it's a rectangle formation. You're going towards the lows. Then you're going to go back. If you balance, you could go back to the highs. So you're trapped between 17,700s, maybe 17,600s. And you got the upside as the 18,100, maybe 200 area. And it's just stuck for months. It's been there. Until it breaks 17,500 support, that's going to be the clue. That's going to say to us, hey, be very careful. The trend has changed now, not just in the daily chart, the weekly chart. So we're watching this very closely, but I still believe that the right side is the bias towards the short side. So many stocks are acting very poorly. So before we go on to Daryl Martin, and let me just show you something here. Look, you've got that arch formation, went to a lower low. It went to, instead of 17,714, we've hit 17,698. So, yep, you could get a little bit of a balance here. But now you got to be careful because the VIX index on the 120-minute chart is in B, and it's holding quite well. So unless the VIX is going to break below 1430s at 1514 right now, that's saying, hey, I'm starting to move. I'm starting to act and react. I'm important now, the VIX index. Before, I was important by saying buyers, buyers, buyers. Now I'm saying, hey, I'm watching sellers come in here. All right. And the short-term trading index, it went to 2.68 this morning, which suggests yet again that there could be a pullback and then another reflex rally of 7 to 9 E-mini points on the S&P. So this is interesting because we've got some action, quite nice action in the financials. The IBB has come back. It was down much sharper, but it's still down too. And I think that's a vulnerable area. But some of the very small biotech stocks are acting a little bit better here. So very important, not a week. We've had the important week. That was last week. Now we're getting the confirmation week, confirming, are we going down further? Are we going to break 17,550, the first really important support in the in that 500 area of the Dow? That's going to be the trick. And the short-term trade, the support, the dash support level, Chapman Wave inside wedge, has a price time 1757 target of tomorrow. Wow, isn't that interesting? All right, I'll be back and have a great day and trade carefully. Just be aware the tide is probably changing. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.